My name is Bridget. I'm glad to be here with you today. Um, Thank you for taking the time to come through and welcome for those that are still new to the country. I work with TD Bank. I'm a supervisor in the contact center. Um, I've been in that role for less than 2 years. Um, I have over 10 years experience in the banking industry in Uganda, in the UK, and now in Canada. Um, so, thank you. I came here because I was invited by my dear sister over here to talk about financial literacy. So many times, or having come from a continent where we don't have credit rating, right? If you want to borrow money, it's either going to be against your income or it's going to be against collateral. You have to present a certain kind of collateral in order to get money from the bank. And that's the reason why there's no credit rating in Africa in general, basically. In the Western world, it's a different scenario whereby you have to build your credit in order to borrow money from the banks. That's how it works here. Now, the best way, really, I would have talked about checking accounts, savings accounts, but those don't really influence the credit rating. So I'm going to focus on the credit cards because when you're new to the country, the credit cards are the easiest way to build your credit profile. Different banks offer different credit cards. There's specific banks that will give people, new landed people, non-residents, or people that don't really have an established status in the country, access to credit cards without necessarily securing them against anything. TD Bank, for one, is not one of those banks. If you're new to the country and you walk into a bank trying to build your credit, they are going to offer you a credit card that's called a secured credit card. You deposit money into an account. So let's say you walk in and they say, okay, we're going to open up your credit card, but you have to put down some money against it. So it depends on how much money you have. I think the minimum is $300 onwards. So the more you have to secure against your credit card, the better for you. Although having said that, if you do get the credit, the most important thing is to manage it, because the moment that, even if it's a secured credit card and it's secured against your own money, it's very important to manage it wisely. You cannot make late payments to your credit card, because every single month the bank reports to the credit bureau. So if you're late for your payments, that's going to be reported. That will prevent you from getting credit in the future. If you use more credit than you have, so if you go over your credit limit, that's also reported to the credit bureau. If you make minimum payments, it's recommended to make minimum payments towards covering your credit balance, but it does show as what should I call it? It does show that you have a liability that's quite high. And the reason is it's recommended that you stay within using 30% of your overall credit limit. Because if you go over 30%, it shows that you've borrowed a lot of money. And let's say if you wanted to ever, and it takes a bit of time to update the credit bureau when the banks send the information to the credit bureau. So let's say you now become a permanent resident. You want to start, let's say, apply for a mortgage because you're ready to buy your new home, and you have used more than 30% of your credit. That's going to affect you in a way, unless you pay it off completely. And it does take a month to update the credit bureau, sometimes even longer, depending on what the situation is, right? There's different kinds of credit cards. There's travel credit cards. I know Stanley mentioned about travel once you get your status. most people that have these credit cards are people that like to travel a lot. They benefit from it. So when you use it, you get rewards like air miles, so that you can easily, let's say in the future, if you want to purchase a ticket for $600, but you've used your credit card it's a lot that you've accumulated points on it. You can always ask the bank to make a conversion for you that will maybe say pay half of your ticket. Rather than paying the full amount, you use half of the points that you've accumulated over the years to make payments to your credit card. Then there's also the cashback credit cards. These are recommended for if you're not really a traveler and you're more interested in earning cashback dollars. So the more you use your credit card on eligible purchases, I want to say maybe groceries, gas, recurring bill payments, that is also going to help you earn back cashback dollars. By cashback dollars, I mean, let's say you spend $10 for groceries, you're going to earn back a certain percentage of that $10, maybe $1 back, right? And that builds with time. And you can also always redeem that cashback and make it as payment maybe towards bringing down your credit card balance. Yeah, minimum payment. I had a customer, speaking to a customer the other day, and he had forgotten to pay off his credit card balance. I think he was struggling with dementia. So the thing is, he had set up a pre-authorized debit, and this pre-authorized debit kept taking money from his checking account to cover off his credit card balance on a monthly basis, the minimum balance. Now, because this customer had forgotten to make payments to his credit card for over 6 months, he had accrued a large balance on his credit card, because you get charged interest if you don't make payments to your credit card in time. But none of that was reported to the credit bureau, because he was still making the minimum payments automatically from his checking account. So it didn't affect him in any way, shape, or form. But if you take it upon yourself and think, okay, I'm going to make my payments myself, I don't have to set up minimum payments, I'll make payments with whatever amount I'm comfortable with, you have to make sure you're making your payments within the payment due dates. Because if you miss the payment due dates, there's something that's called a grace-free period, whereby if you use your credit card and you have 21 days to make payment to that credit card balance that you've used, if you're paying it off in full, to not get charged interest. So if you're trying to avoid interest, if you make your payment within the 21-day grace-free period, you will never get charged interest. Okay. Also, when you do travel, when the time comes, it's recommended for, I also work with fraud and loss prevention. So it's recommended that you insert your card, because some countries do not have the facilitation of tap. I know when we get used to tap, we tap everything, but even the tap has a limit. Tap has a limit of $100 if you're doing normal purchases, and $250 if it's for groceries. So if you tap your card and you get to a certain, you go overboard, it will block your card. And then you'll be coming through to the loss prevention team to talk to them as to what you were doing with your card. And that's very many unnecessary delays, embarrassment. If you go to a store and you tap your card and it's not working, because the moment it stops working, if you tap over your limit, what's going to happen at that point is it's going to lock itself. You won't be able to use it until you call the bank or until you visit an ATM to insert it, key in your PIN number, and then it will reset itself. So more inserting and keying in PIN numbers in comparison to tap, even if tap is very user-friendly. There's also apps that will help you manage your credit. I know for TD, we have the TD mobile spending app. So the moment that you download the app on your telephone, you can keep track of your statement to help you avoid going over your credit card limit, and also to show you when your credit card payment due date is, so that you don't miss it. Because if you're paying, for example, if you're paying from your checking account into your credit card and you make a transfer, that money is going to immediately be available for you to use, right? However, if you're making a payment from your checking account as a bill payment, it's going to take 24 to 48 hours. Now, why do I say this? If it's within your due date, so let's say your due date is tomorrow and you make the payment as a bill payment today, it's not going to reflect because Saturday, Sunday, holidays are not considered business days. So what will that do to you? It will appear as a late payment and you're going to be charged with interest. And also, if you leave that or don't pay attention to it, within 60 days, it will be reported to the credit bureau as a missed payment. And I think that if you miss more than twice in a year, you're automatically converted, your rate is automatically converted into a penalty rate. So with penalty rate, you end up paying a lot more than you should be paying because you missed just 2 payments. So that's how important it is to keep track of your credit. Cash advances on the credit card. Does anybody know what a cash advance is? Okay. A cash advance is when you use your credit card. Let's say you run out of money, you don't have any options, you urgently need money. You go to your credit card, it's allowed, you can withdraw money from your credit card, but you're going to be charged a lot more for that cash advance. Now, the trick to the cash advance is if you withdraw money from your credit card, let's say today, and you pay it off tomorrow or within a few days for this exact same amount, you won't incur that cash advance fee because there's a fee to the cash advance and then the interest. The best thing to always do when you withdraw money from your credit card and you haven't made a payment within, let's say, at the most 2 days, and you have the money available and are ready to pay it off, call the bank and ask them to do a cash advance correction for you. If you don't do the cash advance correction, you're going to see 2 types of fees on your statement. You're going to see a purchase interest fee and then a cash advance and cash advance interest is always high. I think 24.99%. The normal general interest rate for credit cards is 19.99%. The cash advance is customers get very upset when they see 2 types of interest going off their credit card, and it's simply because they took money out of their credit card. It's not just taking money out of the ATM, it's also transferring money from your credit card to a checking account or savings account. As long as money is coming out of your credit card and it's not for purchases or it's not for anything that's within your cardholder agreement, it counts as cash advance. If you use your money to buy lottery, gambling tickets, it counts as a cash advance because those institutions are registered up. It's not something that the bank supports. So you have to be very mindful of that. So once you do get, because I know for a fact that I don't know if some of you, if there's any students here, students are given different priority in comparison to refugee residents because they're given higher limits. And sometimes students are also given unsecured credit cards, right? So if you get to that stage where you have got your permanent resident card and are out of that status or a status that the banking industry now considers safe to lend to, all you have to do is go into the bank, present your new ID, and the bank, because when you present a new ID, when you're a refugee or an international student, the SIN numbers are different. They start with 9, I think, if I'm not mistaken. They start with 9, yeah? And any time that the banks see this, they're not going to be able to safely and comfortably lend you money. They're always going to look at your SIN number because they have all of that information. If it starts with 9, the adjudication team would definitely not put you into consideration. They would decline it. And when it's declined, remember, if you're applying for credit, it's a hard check on your credit report. A hard check makes your credit rating drop every 5 points. And whenever you do a hard check on your credit card or a credit profile, it stays on there for 1 year. So just bear that in mind. So the more hard checks you do, the less your credit rating. That's why some people struggle with coming out of maybe fair into good. It's probably because of that. Yeah. So when you do update your ID with the banks, If you have an unsecured credit card at that point in time and you updated your ID, they sometimes the bank, out of discretion, can take you off the unsecured credit card and release that money for you to be able to use without you necessarily closing down the credit card. Because the main the gist around having a secured credit card is it's secured against money in your savings or checking account, which you cannot touch for as long as you have that credit card open. So some banks will allow you, if your status changes, to convert that credit card into an unsecured credit card without closing down the other card, because most banking processes, the moment that you have that secured credit card, if you're looking to close it down completely and release that money, they'll close it down rather than converting it. But some banks, I think banks are now getting into the habit of releasing that security rather than closing down the card. So that's also something to consider if you do get your residence and update your ID with the bank. Lastly, I'm going to talk about credit being revoked and write-offs. Let's say you're going through a challenging situation. You don't have a job, but you have a credit card and you need to use it and you're not making payments to it. Month one goes by, no payment. Month two, month three, month four. After 180 days of you not making payments to your credit card, it becomes delinquent. And when it's reported as delinquent to the credit bureau, you will stay on your profile for 7 years. Nothing can turn it around. It has to be on there for 7 years. The other thing is the bank revoking your credit. The bank is within rights to revoke your credit if you're misusing it. Misusing the credit can happen in many forms. Gambling, using your credit card for gambling, constantly taking out cash advances and not making correct payments to it, missing payments on a regular, where the bank has come to a point of taking money itself, sorry, from your checking account to pay off, because the bank is within that right. If at any one point you see you're not making a payment to your credit cards and you see a payment coming out of your checking account covering off your credit card balance and nobody has authorized it, the bank is within its rights to do that. It's in the cardholder agreement. I know some people are given this agreement and they don't even look at it. You just put it to the side. It's very important for you to read the cardholder agreement because it will educate you on how to manage your credit card. The key to managing the credit card successfully is to stay within 30% of your credit limit, debit to credit ratio. So if you have a credit card, let's say of 1,000, it's best to use at least $300 of it, or even less. It's normally 10% that makes all the difference. But if you can't stay within 10%, the recommended rate is 30%. And that will help build your credit. Secured credit cards do help build your credit card. I know most people say, oh, but it's secured against my own money. It doesn't impact my credit. That's not true. It does impact your credit because the whole gist of the situation is the bank has provided you with that facility and you have to manage it well. These mentorship programs are mainly for students, international students, and they have to go through a whole phase of interviews. For as long as you're studying, in the last year of your study, there is those mentorship programs where you can apply. And if you apply and get into the banking sector, it's to be quite honest with you, it's very hard because it's very competitive. You're applying with people from Canada as well. But they do exist, but I haven't heard of anybody from actually one a student from Nigeria recently got into TD following that route. Yeah, but it's very, very competitive. So if the credit card becomes delinquent, the onus is on you to make payment to that credit card because it's reviewed every year. Much as it's going to be on your profile for 7 years, if there's some customers that call in to fight that, right? If it was delinquent and you had a good enough reason for why it was delinquent, If it's bank error, then we can always correct that. We send it to the credit bureau. They remove that status from you. However, if it's purely and honestly like your negligence for managing it, it's gonna stay on there for the longest time. But it doesn't mean that you don't have to pay that money. You still have to pay back that money because the card remains open, but you can't use it. So in your credit profile, it will show that it's still open. You just can't use it because it's technically been written off by the bank. Auto financing. Yeah, that's I I don't really manage that area, so it's very hard, and you will find that specific like insurance because you need the qualifications to talk about it. Not everybody is going to give you that kind of information. It has to be with people that have specifically been trained to deal with insurance. So I'm really not very competent with that. Yeah. I'll address the discrimination one first. I came into this country as a student as well. I was very upset when I went to apply for credit and they told me we cannot give you a credit card unless it's secured. So in my head, I was thinking, okay, secure it. I mean, go ahead and secure it. But they said to me, no, you have to give us money to secure. It's like collateral, right? You have to give us money to put into an account and basically keep it on hold for as long as you have the credit card. That's what it means. Just the money. So this money is yours. To be honest with you, the best way of thinking about you is that you have savings that you can't touch on the side because you cannot touch this money. It's tied to that credit card. One moment. And then it's not discrimination, it's just the bank's way of making sure they're servicing everybody and not simply sending you away because you're an international person, right? Because if that was the case, then yes, that would be discrimination. But they found a way to work with us, right? And having a secured credit card in that way also impacts your credit. It's not like it's not because it's reported. It's not like it's not going to do anything for you. It does. It helps you build your credit profile. Because, like I explained earlier, everything that you use on your card is reported, right? The way that the credit bureau works, I don't know if you've had a chance to look at what your credit profile looks like. If you have any kind of loan, credit card, what else counts? Sometimes even the phone companies. So guys, please don't miss payments on your phone bills because this is also reported to the credit card. If you think I'm not going to pay Fido because they're overcharging me, I say Fido because they charge me. I have such a big bill with Fido and I hate it. I don't like it because I feel like I don't even use the phone because I work from home. But at the end of the month, I have a big bill and there's HST on it. And I'm thinking, why am I paying this money, right? You might feel the same way when you see your phone bill, but please don't miss payment to that phone bill because it's all FIDO reports to the credit bureau as well in regards to how you're managing your credit. This is a challenge we have in Africa. It's unheard of. If you don't want to make payments to your phone bill, you can get away with it, right? But not here. Here it's different. Everything is reported. 30% is let's say it's manageable, right? Because situations change. For example, COVID. Imagine you have a credit card that has a limit of 1,000 and you've used up to 700 of it and you lose your job, right? One, how are you going to take care of that credit? How are you going to bring it back down to zero, right? They look at it in that aspect as well. And then also, um, it shows that let's say if you have that one for 1,000 and you have another one for 2,000 and you've nearly maxed it, they look at your liability as a whole. They don't even look at just that 1,000 that you have and you've used 700 of it. They look at your liability as a whole because that's what it shows in the credit. It breaks it down and then it shows these are the liabilities that you have in comparison to the assets that you have. Most of the times the bank doesn't report that. By assets, I mean the checking accounts, the savings accounts. That's what's considered as assets. Liabilities is anything that you've borrowed from the bank. So it is safer to keep it within 30% because it's manageable. It will be easier for you to pay off that money. But you can use your card whatever way you want to. Nobody's going to stop you. But to have the people that you hear that have very good, excellent credit rating, this is what they do. They use their cards and they pay them off within the grace period and limit them to that 30% debt to credit ratio. There's limitations to it though, right? So there is it's called global banking. If I don't know if you've had a chance, if you have a TD account and you log on to your online banking profile, it's under global banking. So if you click on global banking, what you will need though is the bank details for your bank account in Canada. You will need the bank account number, you will need the address, the branch address, the SWIFT code. I don't know if they use SWIFT code in Ghana.
Yeah.
SWIFT code, yeah, you will need the SWIFT code. So once you have all of that information, you can send money to Ghana to straight to your bank account, right? And the rates are mostly favorable if you do it that way. But if you do it with, let's say, exchange rate companies like Western Union, MoneyGram, the rates are high. But if you do it that way, it will go straight. It might take a few days, might take between maybe 5 to 7 days to get into your account. But it's safer, and you can always, there's a trace of that money just in case of anything happens. The same thing, if you're wanting to spend money to send money from Ghana to Canada, all you need is that information I just given you. You will need TD SWIFT code. You will need your bank address here in Canada, bank account number, and branch number. That's it. And then you can send money from Ghana to Canada. You transfer money from your savings to your checking account.
Yeah.
Okay. You can do that. How do you normally do that?
No, I tried several times. It's telling me that I have to go to the nearest bank. I don't know why.
Is that money secured against a credit card?
Yes.
You can't. That's what I was explaining to you earlier. If it's secured, it's because you have the credit card as a facility. You can't touch that money. There's only two options. You can either close down the secured credit card and then they will release that money for you. But you cannot touch that money. Yeah, and then the other option is if your status changes, you can go into the branch upon their discretion. They can convert your card from a secured credit card to an unsecured credit card and release that money for you to use. I'm going to clarify that. So, without sugarcoating it, the bank has an internal rating. So, with the overdraft, it's not reported to the credit bureau. The reason for that is that overdraft is tied to your checking account. The checking account is your own money, right? The bank is going to give you that overdraft, but it's solely for the purpose of the internal behavior score of the bank. How you manage that overdraft is how, I don't know if you've heard of people that get promotional offers of the bank is giving you a pre-approval of this, a credit card, line of credit, right? That's what that overdraft is for, because it's tied to a checking account, right? Just to correct you. It's money that the bank is lending you, but the difference between the overdraft and the credit card is with the overdraft, whether or not you want to, you have to pay that money, because whatever, it's automatic. Whatever amount of money comes into your account, if you have, let's say, if you've used the overdraft, it automatically pays itself off, right? If you leave it like that for a very long time, like let's say if you use your overdraft and are not making payment to it, it goes into the collections team. That's when it becomes a problem. Because once the bank writes your account off, a checking account off, that's a big problem. That's when it starts to affect your credit. But it's more for the internal system of the bank. Because sometimes some agents are in training and they don't really understand the situation. There is no reason, if you have your own money, that the bank should be turning you away if you want to open up a secured credit card. There's no reason. They will run your credit, right? But for as long as you have money to put down to secure against that credit card, there's no reason that the bank should be turning you away. It's sometimes you meet people that are still in training and don't really know, because you also have to be, as Sandy said, be proactive, right? If one branch is turning you away, go to the next one. Yeah, I know. I have a CIBC credit card as
Yeah.
well. Like I told you, I came into this country as a student. So when TD told me to open it, I did open it up. But then with due time, I was like, why do I have to hold down my own money? So I went to CIBC and they gave me a credit card that's not secured. But that's CIBC's decision, right? They decide to risk that way. It's user friendly for people, especially international people that have just come into the country. But it depends. Banks are different, but that's how TD operates. If you're making payments to your bill on time, it's not going to affect you in any way. Yeah. It just shows what shows on your credit profile is that you have a FIDO account or you have an account with a telephone company, right? It doesn't show them how you make the payments to your bill. It doesn't. No. It's just they only start to report if you're not making payments to your bill.
You are who you are yesterday, today, and forevermore. What you say is what you do.